Good morning, everybody. It's Chris from Serene Education with the 4 majors and notice update for the 17th of May 2012. It's an overcast Thursday here in Wales. Nonetheless, warm inside. Let's have a look and see what's been happening on the euro this morning. Okay, Asian market session. We've seen slight upside consolidation after yesterday's little spinning top. This noticeably after a massive downside move over the past 3 days, particularly after breaking through the 1300 mark here. You can quite clearly see a lot of prior support on this pair over a number of months, leading up until this recent breakout. And I'll just mark it here, a nice dark black. There we go. A lot of support through here. However, over the past couple of months, consolidating to the downside. Swing lows depicting downside momentum, institution moving average above price, suppressing price to the downside, and eventually we saw price reattempting this 1300 for the 5th time in as many months, and then we had a nice bearish breakout. Slight pullback, hesitation, more bearish sentiment in that pullback, and at the end of 61.8 for retracement, failing to hang on to this the 129500 under the 1300, and sure enough we had to push off the cliff, and we fell quite substantially over the past couple of days, which has taken us well below the 78.6 fib retracement area here, just above the 12800. And now we've gone to consolidation as we head into this 1260, 1265 price support and resistance area. Consolidating, more short covering. A lot of people who are in this actual breakout, you have 1300, starting to take profit as we head into this this price support and resistance area here at 1260, 1265. Below that, well, we've got a lot more to fall. 161.8, another fib retracement area, roughly around the area where we had price support and resistance here at the 12200, 1221.50 mark. So there's still another 50 pips, 400 pips odd to the downside if you break below this 1265. So things are not looking all that shabby at the moment for euro. ECB has been trying to stem things in Greece by not lending money to banks that they feel are well, they consider solvent. So yeah, a lot of people, I think there was about 1.4 billion euros was pulled out of Greece recently by the investors. So yeah, things are not looking all that rosy in Greece, and it's pretty much going to be on everybody's mind for the foreseeable future. Are we going to see Greece leaving Eurozone shortly? I know Merv King has also put things in place to try and for the inevitable, as he puts it. So things are not looking good. But as it stands, CTC, moving averages, our strategy plan is still bearish on this particular pair. We are seeing consolidation as we head into this 1265 price support and resistance. That's just normal. People who initially took a short over here at the break of 1300 would have looked at 1265 or 1280, apologies, but with 1265. So the closer we get to this 1265, the more consolidation we're more likely to see. Yesterday's spinning top just a clear indication of a consolidation, more of a stance from more of a selling output to more of a holding or consolidative form. And sure enough, we've seen on the Asian market where we're seeing contracts being closed or profit being taken as we head towards this psychological support and resistance area here at 1265. Onto sterling, you can quickly see prices also, like its euro counterpart, really been falling quite drastically over the past couple weeks. Primarily, this all just stems back to what's happening in Greece and the shortfall that's happening. It's just a knock-on effect that the Brits will get because of their close tie with euro. And you can see the pullback. Noticeably, the previous day, not yesterday, before, hitting 61.8 and breaking lower than that, and quite clearly moving lower. 78.6 would have been the ultimate pullback for this pair, and you can see we broke through it yesterday. Broke through, closed lower, and this morning on the Asian market session we've seen a pullback to the underside. If it stays below 78.6, then we're seeing consolidation before we see a further extension to the downside. CTC is very much in favor with us. Past couple of days we've seen a lot of bullish movement to the downside, and sure enough, bearish movement to the downside, apologies, and in doing so heading back and closing lower than the 1600. Now 1600, very strong psychological support and resistance level over a period of time, noticeable support and resistance level, especially over the past couple of months. Hesitation, but you'll know that the institution moving average, the green line over here, is still below price. So as long as it maintains above this area here at 15,800, then we should still be looking for long-term sentiment is still positive. We are seeing a short-term or sentiment being very, very negative, but this is primarily because of what's happening in Greece. This is all offset because of what's happening in Europe at the moment, and it's giving everybody the heebie-jeebies. As I mentioned, a lot of people are pulling their money out of Greece. Looks like the new government, well, they can't come up with a new government because they can't. The new government that's been that won the last election is not in favour of austerity measures, so they've put a massive piece of wood in the spokes, and so yes, big problems in Greece, and that'll be the overall one to watch over the next couple of weeks or months. It's a lot of countries in Eurozone are actually going ahead with plans for the likelihood of Greece leaving the euro. So Merv King has been doing exactly that for the British public. So 78.6 last port call for the pullback, and this is well gone, far too gone. We should have seen 50. It's hit 61 and it's gone past the no return. The whole point of Fibonacci retracement is to see how far in an upside trend. In this case, we're going to see a pullback. When it starts hitting past the 50 and 61.8, then we know that the actual pullback on in this case a bullish move has now petered out, and it's turned more to a bearish stance. And sure enough, we're really trading below 78.6, which is all far too gone. And in doing so, trading well below the two moving averages, the small time moving averages, your 20 and 50 here, and heading back towards this area here, this consolidation area that we've seen over the past couple of months, back towards the 100, which would be the institution moving average here, just higher than 15,800. So looking, if it can stay below the 78.6 area here and consolidate, and we could see further extensions to the downside for the foreseeable week here at 15,928. So if we can stay below that area, then we should see further extensions to the downside in the not distant future. On to Swissy, good old Swiss franc. Let's have and see what's been happening. This pair here growing over the past couple of weeks. The US dollar really gaining strength against the Swiss franc and moving higher and then breaking a lot of price support and resistance levels. The last noticeable one here at 935, really closing above with a nice bullish engulfing and then really moving higher on that that break or close higher. Port of call for this pair long term should or would be roughly around the 960, 955 going into this area here. That's the major prior high that we've had on this pair that we saw back in early Jan. So 960 would be our overall target. Moving averages all below price as expected, and our template, our strategy template in favor. We have our blue arrow, blue candles, and CTC very importantly are blue across the board. So everything's looking for buying setups, and we're just seeing consolidation now after this upside move, a bit of consolidation with the spinning top. Spinning top is an indecision candle. We want to see a decisive candle. Whether we see another bullish engulfing to confirm yes, the profit taking has been taken, and we should be looking and they're looking for a second extension to the upside. Then we'll start looking for that. As it stands over here, you can see the swing highs, swing high, swing high. So in this area, roughly around here, we should see some sort of we would like to see a formation pattern of a bullish engulfing, a little hammer type thing, confirming that yes, that buying sentiment is still favoring upside, and we should be targeting these areas. So indecision, got to see a decision candle. See that indecision, indecision. There's my decision. Trade the decision, the outcome. Indecision. There's my decision candle. Trade the outcome. So we're waiting for a decision candle, and then we'll trade that outcome. But as it stands now, everything's looking favorable for 960 as our target. This price really moving higher and breaking above price support and resistance levels and heading to the upside quite convincingly. Last pair of the day is the US dollar Japanese yen. Let's have a look and see what's been happening. Massive move to the upside and a pullback. And the pullback fading at 8,400, major support and resistance level over a number of months. And in doing so, we've seen a pullback for this pair. We're expecting it to pull back to roughly the 800 or 80 mark, and sure enough, price has done exactly that. And this 80 here, very strong support and resistance level in the past, a noticeable one. However, you can see a lot of consolidation under or with this area here. So boxing it, clear and decisive moves here. We want to see a decision, a nice bullish candle upside or bearish candle downside. As it stands at the moment now, moving averages, etc., all pointing downwards. So the downside, swing low, swing low, swing low, swing low, and just recently, yesterday's candle in particular, closing higher than this downside trend. However, still not giving enough momentum to the upside to favor upside move. We have a bullish engulfing here, so it engulfs some of this area here, and then we get a little shooting star type formation at this resistance level here. We want to see something more than that. We are seeing all parts of our strategy starting to coincide with each other. We have a blue arrow, and the candle is blue, but it's a daily candle, and today's we would have to wait for today's candle to close to give us a decisive indication of this is definitely positiveness at a price support and resistance level. If it is the case, then great, it's a start of what could be a very strong support, and then we could see a psychological bounce higher. If that was to be the case, then we could be targeting here at 81.50 as our first target to the upside. Second target roughly around at 83, and back up towards the 8400 in the foreseeable future. As long as we remain above 80, then the likelihood is we're likely to see a bounce. If we get below 80 again, then there's more likely to see bearishness. But we do need to see a bullish engulfing in my eyes to see this genuine upside move. Otherwise, it's just consolidative again, and we don't want to be trading consolidation because we're not going anywhere, and it means we're not making any money. We're just wasting time. So I'd rather give back some to the market and know that there's clear decisiveness in the move, or risk the wrath of the market where I get triggered into something and I'll just sit around going nowhere very fast. So it's far better just to be patient in this case for the US dollar Japanese yen, look for a definite confirmation signal, and then we'll trade it. Other than that, guys, that's it for today. Hope you have a fantastic trading day. There are bank holidays for Switzerland, France, and Germany today, so liquidity in the market might be a bit scarce European session wise, but we still have the US market to trade this afternoon. The word on everywhere is probably going to still be Greece, and everything's looking a bit consolidative over last night. This is primarily because people are starting to cover their shorting positions, taking a bit of profit. We've seen a lot of movement to the downside in the wake of what's happening with Greece, so people are taking some profit before we could potentially see another extension. But this is what we're waiting for now. We've got to be patient, wait for the profit taken to cease, then look for the big boys to get back into these positions, and then that will be confirmed by candlestick patterns, etc., around support and resistance breakouts, etc., and then we'll trade it. We'll trade in the direction of where the big markets are. Other than that, keep it simple. Follow money management rules, guys. Back up any trades you might have with some strong money management rules. Very, very important. And most importantly, enjoy your trading. Keep it simple, as I mentioned. And I'll see you first thing tomorrow morning. Until then, trade serenely.